Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. Well, today we are talking crypto lending and what is it exactly, and most importantly, why you should care. Well, savers frustrated with the measly yields offered by banks in recent years appear to have found a solution, so-called crypto lending accounts that can pay interest rates of 18% or more. So millions of investors piled into these products offered by firms, including Celsius Network, introducing a whole new group of people to cryptocurrencies. But now it appears that some of those too good to be true returns may have indeed been too good to be true. So after amassing more than 20 billion in assets at its peak, Celsius saw the value of its deposits melt away until it was plunged into a solvency crisis, providing another blow to the crypto community. But here to give us all the details and help us understand what's happening in Celsius is Simon Dixon. He is the founder of Bank to the Future and considered the best investment banker in the space, according to our good friend Max Kaiser. Simon, it's been too long. Always good to see you. Welcome back to my show.
Yeah, always good to be here.
So I gave a little watered down primer of what's happening with the Celsius network. Like I mentioned, it's among several crypto blue chip companies on the brink of insolvency. But are they going to be able to turn things around? What's the latest here?
If I get my way, then they will be able to turn things around. But those are board decisions. There's lawyers and there's traditional finance that could get in the way of the best result that I consider depositors could get at the moment. So the current situation is right now is that our industry has created a 2007 style systemic risk event similar to Lehman Brothers, but built upon digital hard sound money. Whereas opposed the fiat money was built upon debt, we have replicated some of the same processes but built upon digital hard sound money. So we're going through that moment. We've been through moments like this before. In the early cycle, in the first cycle, we had Mt. Gox that accidentally went from an exchange to a fractional reserve Bitcoin bank. And that led to a pump and crash. And then we had the ICO boom and bust, where securities laws were being ignored and everyone was printing money. And that led to the next boom and bust cycle. And now we've had a similar thing with decentralized finance and yield. And many companies, including Celsius, which I should disclose, I was one of their largest depositors, and I am one of their lead investors and shareholders through a syndicate at Bank to the Future. Have found themselves in a scenario where we need to do a disaster recovery. But thankfully, we've done that many times. We did it with Bitfinex, and we would like to do the same again, but slightly different. So that kind of brings us to the current situation.
Yep. Well, first of all, thank you for stating that, and that's why I wanted to have you as a guest today, because I could not think of anyone better to really speak to this matter. But to back things up a second, for the folks at home who are new to crypto lending, right? Let's just zoom out a second. What exactly is it, and why should we care? Why does it matter?
Yeah, so because Bitcoin has a fixed supply and it is digital hard sound money and you can't change its supply, it means that over time, people take an opinion, just like they do with gold, that it's a store of value. But with Bitcoin, obviously, it's performed so much higher, so people consider it somewhere between a speculative investment and a store of value. For that reason, many people don't want to sell their Bitcoin. They believe that fiat currency in the long term goes down in value and Bitcoin in the long term goes up in value. And therefore, some people need to meet their expenses And so several innovations were created in order to allow that to happen. The first innovation was the stable coin, which is essentially a dollar on a blockchain that you can send as easy as sending an email. And the second innovation was borrowed from traditional finance, which is just pure collateralized lending. You have it in the gold market as well. You're sat on your gold, you want to take some dollars out, so maybe you want to meet your expenses. And so therefore you could lock up your Bitcoin, and you would lock up, it would be what's normally known as over collateralized. So you might want to borrow $1 million, and so you put down $2 million of Bitcoin. You lock it up into a peer-to-peer lending company, and then people borrow that Bitcoin and they're willing to pay interest to you. So essentially, you're taking Bitcoin where you own the private key and putting it subject to risk.
Right.
So you're changing it from money to investment, as it were. The problem with Celsius is that it was pitched to many people as a low-risk saving account, when actually, in fact, it became a very high-risk security. And so many people were thinking that stable coins are the same as dollars in a bank, not understanding the difference in the risk. And therefore, they took their dollars out of a bank, put it into a stable coin, thinking that they were receiving a higher interest because it was presented as a low-risk saving account paying a higher interest, not understanding that there was a bunch of risk and things happening behind the scenes. And so therefore, the original model of collateralizing and a peer-to-peer lending model where someone's willing to pay the interest and another person's willing to receive the interest for locking up their Bitcoin meant that if Bitcoin crashes, you have a point where if it crashes 50%, then you get a margin call, and you have to sell the Bitcoin. And this became so big, this entered into the hundreds of billions across all the different platforms, that when Bitcoin crashes, you created a systemic risk event where you had cascading liquidations as a result of some products that were constructed very badly and regulations that were not followed, and platforms deviating from peer-to-peer to essentially becoming a security and then accidentally fractional reserve banking without the license. And that's kind of...
Didn't want to interrupt you there. Just when you say regulations not followed, I guess my next question is, are regulators doing anything looking at crypto lending? Have they stepped in? Will they step in?
Yes. So every lending platform has been contacted by different regulatory bodies, and the consensus is that they consider it a security. And the reason they consider it a security is because if something is a low-risk saving account, it needs to be treated very differently to something that has inherent risk, that needs disclosures, that needs to do suitability testing, and everything that we have to do at Bank to the Future when people invest, making sure that it's only a percentage of their income, making sure that they know they can lose their money, and those types of things. And that is really the difference. And then, of course, you have the higher level, the maximum scrutiny, which is when your deposits aren't matched one-to-one. So you've got peer-to-peer, which is where they're matched one-to-one. Then you have securities where they're matched one-to-one, but there's a risk and there's investment decisions happening in the middle. And then finally, when they're not matched one-to-one, you have a fractional reserve bank that requires immense regulatory oversight in order to ensure that those risks are being managed, deposit insurance, bailout potential, bail-in potentials. And it appears that over time, it has deviated from its original model to these platforms becoming either unlicensed banks or unregistered securities businesses.
Interesting. So, what's interesting to me, Simon, is folks not understanding exactly these platforms like Celsius, the risk associated. Could you make a parallel to folks who are investing in Bitcoin and not understanding, how it works and just piling in without knowing the risks?
So yeah, I guess you could make that comparison, but Bitcoin is, I'd say, more comparison to the altcoin industry, where they're all trying to outperform Bitcoin and invest in the next Bitcoin killer, and they have no idea what they're investing in. They have no technical competency to assess some of the technical risks behind these things. And really, they're just fiat thinking. They're just using it as a mechanism to try and make more dollars, and dollars was what they really wanted. Whereas Bitcoin thinking, from my perspective, is people understanding that the dollar is only goes down in value and makes you poorer if you don't invest it, whereas Bitcoin was designed to go up in value, and therefore the lower the price of Bitcoin, the more Bitcoin you end up with. So it's really that deviation in thinking. In the crypto markets, you tend to have people that are trying to make as much dollars as possible. And those that get Bitcoin realize that the lower the price, the more Bitcoin they can accumulate in order to outperform inflation over the long term by an order of magnitude if the past equals the future.
Simon, we've seen reports that Goldman Sachs was going to step in to acquire Celsius' assets. Do you have any insights there?
Yeah, so this was my biggest fear. When I realized that banks were being engaged as advisors at Celsius, I immediately took to Twitter. Well, firstly, I contacted the team and said, traditional finance are not going to give you a solution. When we did it in the past with previous companies and disasters, we had to act decisively within 2 weeks to create, to prevent the big problem, and effective communication in order to help people understand the severity of the situation and the solution. Unfortunately, traditional finance did not take that. We gave it to them, and they just simply didn't have the ability or experience to execute it. So the next approach was, we said, we will execute it. We've done it before. There's the advisors and traditional finance didn't move fast enough, and therefore it ended up into the next phase. And therefore, I'm afraid at this stage it's going to require a different management team, a different brand, different regulations and different licenses in order to try and salvage something. And so really, we gave them 3 different proposals, and we can share a little bit on the financial innovation that we used, where, for example, Mt. Gox took 8 years under liquidation proceeding, whereas with Bitfinex, it took a maximum of 9 months for people to receive over 16x return on what they originally lost, plus dividends in the company and equity in the company as a result, by implementing more of a bail-in model than liquidation proceedings.
And, obviously I don't wish this to be the outcome, but what happens if Celsius can't salvage it? How does that play out? What does that look like?
Yeah, so what happens next is, if they don't act decisively, and this is why I've been rallying the support of the community in order to let the community know that there are better solutions, because at some stage the board will not be able to make the decisions. Look, some people believe it's illiquid. If it's illiquid, then fine, they'll be communicating and they'll tell you, this is how long it's going to create to get your deposits. They're invested, they're stuck in a contract, and in a few years' time, we'll give you your deposits back. My fear is that there's a big hole and it's insolvent. And if it's insolvent, it means that they have to actually make a plan for that insolvency, or they have to hand it over to bankruptcy. Once it moves into bankruptcy, you've got traditional finance, traditional advisors that will be looking to manage those risks. And I believe that they don't have a good enough understanding or the experience in order to give some of the solutions that we've been proposing in order to get out of this mess that's a proven track record for it. So what happens in that case? If they allow traditional finance to take over, you may have, and just sorry, I didn't answer the Goldman Sachs question. I did contact the people that I know in the relevant departments at Goldman Sachs, and they said that there was no truth to it, and they weren't looking at it. Take that for what it is. I have source and that it's not true, that they weren't looking at it. I also have experience. Most investment banks, even if the team wants to do it, by the time it gets sign-off from the executives, you'll be messing around for 6 months to a year, and the executives will say, no chance are we risking our brand and our reputation on this crazy little industry called crypto. So it's not going to work. And so the worst case scenario is that TradFi just strip out all of the good assets in a predatory way, take out all the bad assets, and sell all the crypto, which creates the next wave of cascading liquidations, because Celsius's balance sheet is significant enough to cause the next wave of cascades that then will cause the next wave of cascades from all the companies in this systemically risky scenario. Bitcoin will be fine. It will create an amazing buying opportunity, but I don't want depositors to lose their money in order for me to accumulate some cheap Bitcoin. So I wanted to get out there. When I started receiving messages from people whose life savings at the moment took it out of the bank, put it into Celsius, thinking it's a low-risk savings account, and therefore, if I could get a better result for the depositors, then I needed to try and do all we can. And we know we got solutions. We just need the lobbying pressure from the community to make sure that TradFi do not implement the disaster scenario because they're risk adverse or they're malicious actors trying to harm our industry.
But there is that risk, Simon, that some folks might just lose all their life savings.
I don't believe you will lose it all because there is a big chunk of the deposit that's just simply in a liquidity issue. So there will be a percentage that comes back. But if TradFi do it their way, they may cause a ginormous crash, sell it at the bottom, strip off all the assets. And I want to make sure that everybody on record knows that there are much better solutions and they have a fiduciary duty to pick the right solutions that give depositors and creditors the best solutions, then shareholders. And if there's a future to the company that can be built, I want to make sure that people know that there are people, and we put together a multi-billion-dollar syndicate that can take a model forward and try and give both depositors first, then shareholders a future.
Simon, when you say a cascading situation, but Bitcoin will be fine, what kind of price drop could we see?
When I was on your show last time, Bitcoin was about $65,000, and you were interviewing me about how bad I think it can get. And I said we were in a raging bull market, and I said it could go down to $20,000.
I'd expect to see a correction. I hope for a correction to approximately 20 to 25,000, so that all those people, when it was up at 65,000, said if it crashed to 20,000, I'd do anything to get in. But the reality is that those people won't get in because they'll be fearful that it's failing.
Everyone was criticizing us and saying you're crazy, just saying you're trolling, you're fudding the market. So it was on your show that we were trying to prepare people for the yield and DeFi crackdown that we were predicting at the time. I do believe that if you go into the next phase of cascades, you could be looking at a $10,000 Bitcoin, and then a sideways market, and then the next phase and the next cycle.
Interesting. I mean, I've had other guests on with that call. Look, we're closing out one of Bitcoin's worst quarters in history. Assets under management for crypto investment products in June reached a record low. I know there's a lot of moving parts, and I know you're not a soothsayer, but how long can this crypto ice age, is what I call it, not just a crypto winter, go on for? What would it take to turn things around here, Simon?
I believe that if we can successfully execute a recovery plan well, so if you look at what happened in history, when we did a successful plan for Bitfinex, that led to Tether becoming significant enough that innovation happened where a company called Binance came along and built the largest cryptocurrency exchange based upon using Tether because they didn't need to get banking, and therefore they could move at the speed of light that led to the next bull market. I believe a similar thing can happen if this is managed well. So if this is recovered well, it can lead to a change in sentiment, a sideways market, and I believe that this will lead to recovering all of the crypto companies that are in these similar situations through a new form of securities that could lead to a blockchain-based securities boom that could lead to the next phase and the next cycle. If we allow this to go down and do it traditional finance, then look at Mt. Gox, and we entered into a cascading market. Their Willy bot, which is the bot that they put together to try and save the market, disappeared, and then you entered into a major sideways market for a couple of years. So it all depends on this moment and how our industry reacts to this moment.
That is so beautifully said, Simon, and I think it perfectly answers my introductory thesis that why it's saving Celsius is so vital to the entire industry, so vital. I guess just final thoughts, going back to the phase in which crypto finds itself in right now. How do you keep the faith?
I keep the faith because of Bitcoin. As I said, I've always believed that Bitcoin is the world's best shot at ever achieving digital hard sound money. I really don't care how low the price goes because mining adjusts because it's all built into the white paper. You have the difficulty rate adjustment. The fundamentals never change. It's money you can own, money you can spend, and money that has a fixed supply. But you get these ginormous cycles where people try to recreate banking on top of digital hard sound money, and everyone just makes the same mistakes again and again and again. You have these companies that turn into ignoring regulations, turn into fractional reserve banks, then everyone ignores it further, then more and more people put their money in, then you have these corrective cycles, then you have regulatory crackdowns, that leads to a sideways market, then someone comes up with the next idea, and you just keep repeating it again and again and again, but every time you end up with higher lows, and you end up with a lot of lessons, and you end up with new financial innovation and digital hard sound money still existing. So while we say it is critical to save it, it just means that if you don't save it, then I believe that everyone gets the opportunity to dollar cost average into cheaper Bitcoin for the next few years. But I really do not want depositors to lose their money because the types of messages I was getting that really made me break my silence and go on Twitter was people that were really suicidal even because they couldn't even tell their spouse that they've lost their life savings. And I don't want, if I could do anything to prevent that, that's way more important than my investment thesis of playing a cycle and getting some cheaper Bitcoin.
You just put a stake through my heart by saying that. That's, of course, at all costs, want to avoid any pain.
And also, sorry,
Simon,
that is my appeal to regulators. We will do this as compliant as we can, but really consider what's best for investors when you're considering what comes next. Because I do believe there is a big regulatory crackdown, but sometimes you need to use financial innovation in order to give investors a better result.
Just want to bring up inflation here for a second, since you've been a proponent of Bitcoin from the start, from its founding, really. And when we heard so much talk about how Bitcoin was going to be the ultimate inflation hedge, I mean, is there a clear thesis that could be drawn out here now that it has failed as an inflation hedge? Is it just not mature enough? Any conclusions you've come to?
Yeah, I mean, Bitcoin is an amazing inflation hedge long term. For 13 years, it's beat the shit out of inflation. It's short term trading markets, then it's a risk on asset, and the fundamentals never prevail because market manipulation happens, situations like Celsius happen, and you have people that are using their money from the fiat system. I still hold to that value that if you're taking a 10 to 20 year opinion, Bitcoin is the best inflation hedge there, and I'm betting on that being the case. If you're asking me to trade based upon inflation, coming and going, and the short terms of the market, then Bitcoin has been very correlated to stock markets and risk on assets.
Okay. Just any final thoughts for investors watching, Simon? Are you buying any gold these days?
I do buy gold. Every month I do the same thing. I have a gold portfolio, a dollar portfolio that bets that we're going to transition to central bank digital currencies, and then the vast majority is my Bitcoin strategy. I just want to be protected for all outcomes because although I have tens of millions on the line in Celsius, if I lose that money, it makes no difference in my financial position. I'm more concerned about the people where it does make a big difference in their financial position. And I do want to say one thing. I was taking a break from crypto because recently my father sadly passed away. And he actually lost all of his money in the stock market and asked me to help him understand where all his money went when he lost it in the boom and bust in 2000. And that was actually what made me obsessively study this subject. I just want to say that took me deep in debt trying to create a bank. So I do know what financial anxiety feels like. I do know what it feels like to lose all of your money. And I just want to let people know that there is always a way to recover. The only thing you can get from this is an education and an understanding of what not to do. And I do believe that everybody will be a much wiser, understand what risks there are, and really react. And so, it's never worth taking your life. It's never worth concerning yourself over these things. Obviously, you want to get the most. We'll try to work to get the best result. But there is always a way to recover. Most people vastly overestimate what they can achieve in 1 year and underestimate what they can achieve in 10 years. And that's what leads people to trading shit coins, doing all crazy mistakes, putting their life savings, not having a longer term view and not disclosing risks and all that type of stuff. So learn from this, have a long-term perspective, and you're alive at the most interesting and exciting time in financial history. You've got to get on the right side of those trends because a lot of people are getting hurt.
That just beautifully said, Simon. I really could not add anything to that. And yes, for the folks at home watching, please know there is always a solution. And Simon, my heart goes out to you for the loss of your father. I know how much he means to you, and I am confident. I never met him, but I'm sure he's incredibly proud of you. So thank you.
Yeah, and I do want to just end on that point. And this is why life is so precious. We were connected by the subject of money, but in his final days, we weren't talking about money. It was just about love. And so love, family, it's important. You can recover from money. Money comes and goes.
Sorry. I don't think I've ever cried on camera, but thank you, Simon.
Thank you for your love that I can feel.
Well, on that note, Simon, I could not have said it better. Thank you so much for your time, and wishing everyone luck during these difficult times. Thank you, Simon.
Pleasure.
And thank you all for watching. We'll have much more for you coming your way on Stansberry Research, so be sure to stay tuned. And don't forget to sign up for more incredible interviews coming your way at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.